Welcome everybody. Hope I'm clear today. Welcome to our live show here, our live stream. We have this every week. And today we have some fundamental news. We have the NFP data coming out, which is going to be quite interesting because we have a lot going on. So it's quite nice to see that many of you are joining my channel, are supporting me, and are asking the right questions. I hope you're locked in. It's your host again, Tony Trades channel. And we've had quite many NFP sessions here. By now, if you've been able to go through some of my videos, you understand how I analyze the market. So a quick reality check. The numbers actually drop in about 10 minutes plus minus, right? As we can see here, the numbers will drop. Let's refresh this. Okay. Yeah, in about 9 minutes. So we're good to go. We're good to go. So we have about 500 seconds to get our minds right. Now, once again, we're going to use every second here to, I want this to be very educative. You should be able to ask questions. By now, you know the drill. We don't just watch candles like, any retail trader out there. We actually dissect the way, the whys, the whens. We look at the market soul from inside, from the back end. And today we're going a layer deeper. What do I mean by that? We've done the basics. I mean, you know where to get the data from. We've also talked about some of these open source websites where you could dissect the numbers. And we've drawn our lines, right? So today we are going to talk about the global battlefield. What's actually happening in the world now and how it affects the financial markets, right? The dynamic is one thing, the way the mechanics of the financial markets move or work, and what we're seeing outside geopolitically has another story. So because here's the truth, the US jobs, the NFP numbers report doesn't exist in a vacuum. It drops into a world. The analysts get these numbers and they actually have where to place them. What do I mean by that? They have templates. They understand that if these indicators move higher or lower, they'll affect this, and it's kind of like a chainsaw. So without wasting any time, I want to invite you all to my community. I'm actively growing my accounts. You can check out my Instagram and my TikTok. I'm pretty much everywhere, so it's easy to access me and ask me high quality questions, right? If you're just DMing me, asking me very incompetent questions, then I advise you to go check out my community and you get a new guide. I have a free guide for everybody to go check out how to break down fundamentals, technicals, and get around it. You don't have to pay anything. Another promo here is you could use my code here to get 100% on your first deposit, and that's pretty much it when you come over here. So guys, what's happening globally? Let's quickly break down what is happening globally. If you can hear me, please, there's a chart and you could go into the chart and ask questions. So we have geopolitical tensions happening at the moment. You're seeing what happened previously with Venezuela. Then we had the Middle East. I break this down. So we've got ongoing conflicts in Eastern Europe and the Middle East. These aren't just news tickers, guys, right? They directly affect energy prices. As we can see here, we've had oil on the daily, right? This is oil, and this is just a few days. So we had at the end of February 26th, it was around 70, right? All the way from 24th, 65, and we are literally around 87, right? So globally, we're seeing energy prices being affected. Supply chains, we see the Hamas Strait is temporarily closed, and we're starting to see some sort of diplomatic negotiations going on. And most importantly, we see safe havens like gold, right? So these numbers will definitely affect some of the flows. Now, a weak NFP, what does that mean? A weak NFP, right? If we get any numbers that are weak, previously we had this was the report from last NFP, right? And if we have a weak NFP this time, it might send gold flying, right? Briefly, right? It has to all be under some kind of context. So a strong one, it usually could send it crashing through key support. So I hope that you have your support zones and you're ready to go. Because once it breaks through those support zones, then the dollar becomes the ultimate safety trade. Just for this scalp, right? Now, if we move on to what central banks are doing, central banks, you have to ask yourself some of these questions. What are central banks doing? What are they thinking? We're seeing the Clarity Act coming. By the way, speaking about crypto, we have Bitcoin seated at 70,000 with a market cap of 1.4 trillion US dollars, trading volume of 47 billion. So we've seen that the alt season is right between 41, right? It's bouncing here. It's floating around this area, right? Because we're starting to see movement. And with the volatility index as well, my lines are drawn up there, and we'll just reset that. Let's remove all these drawings. Yeah, we've seen some pumps here and there, but that doesn't really matter, right? We need to have all this in context. So the central banks, the Fed is very data dependent, right? The European Central Bank, the ECB, is fighting its own battle with stagnant growth. If I'm the last time I checked, and the Bank of Japan is still the outlier, clinging to negative rates. So the NFP number will widen or narrow these policy gaps, and that's what actually creates the monster moves in Euro, US dollar, and or USD JPY, or any of your measures. So the soft landing narrative, I'd say the biggest question on every institutional desk right now is, does today's data confirm the soft landing, or does inflation, what do I mean by that? Inflation cooling without a recession, right? Or does it poke holes? So this could be a very nice, interesting look here today. So today, guys, we are just geopolitical analysts, central bank whisperers. We're looking at price action. Let's see how traders actually break down these numbers. We also will be reading the data live to understand what it means for the dollar dominance. Okay? And for that reason, we are going to the official website. So I want you to reset your mind with me for a few seconds. We have 1 minute and 20 seconds to go. Okay. Please ask questions in the chat. The goal for the next couple of minutes is to get reach. Everyone wants to make money. So the goal is not just making money, guys, but try to understand, right? If you're just coming to NFP to have your limit orders, up and down and play, we call that gambling. You have to make very well informed decisions before you get into anything. So I'm going to show you how I break down this. If you're new here, please go check out. I do live streams every Friday. We are growing. My community is growing. Telegram, I have 3 sessions a day where I provide high quality signals. So we want to observe the institutional reaction. We want to wait for our high probability setup based on structure and the story that the data will tell us. So calm your mind, guys. Remember, we don't rush. We wait about 15 seconds. And yeah, we're having 10 seconds there. Don't forget, we are looking at post-daylight savings, right? So the rhythm is a little bit different. We are in the New York-London overlap. This is where 70% of the day's volume happens right now as I speak. And that is why I really advocate to trade around this time. That is approximately, let's see, yeah, right now it's opening. So we get the data, right? Spending, we get the data. So we have retail sales at 0.2%. We have non-farm employment change at a whopping minus 92,000. We have core retail sales at 0.0 and the unemployment rate at 4.40. Now on lower time frames, we are seeing spikes. So I'm sure some of you that are really hungry have gotten in right here. Okay, we're seeing a nice spike up there with gold. You've made your money and you see. So it doesn't matter. This is an educative live, guys. If you're in, fine and good for you. If you've made money, good for you. But I just want to show you how I break it down. Okay, so once you've understood the numbers, right, you could check out cross pairs. Look at the DAX. You see that spike right there. I had my support there. You could look at the euro. We're seeing the spike now. Everything is moving. You see that? Which is actually a beautiful thing. So we have volatility. Now, if you go check out the VIX, perfect. Now, this is where I want my VIX to be, right? I want my VIX to be closer to the 30 border. And the reason being is, go to my community. I'll explain that. That is quite a deep dive. Okay, guys. So once we have the data, the final checks, the charts are open, the levels are marked. Let's say you're doing gold on the 5-minute. Okay, you have your levels. You want to wait for a retest on a 3-minute or a 1-minute. You could check that out. You've set up all your indicators. By the way, for strategies, you could go check out my YouTube channel. I have a plethora of indicators out there of strategies. I kind of break it down there for you. All right, guys, without wasting time, let's go to the economic release. Go to latest releases. Okay. Now, we have employment situation, we have employment cost index, and we have the consumer price index. Guys, if you need this website, it's the US Bureau of Labor Statistics. Now, major economic, okay, so what do we want now? So what we want is, we want to look for the non-farm payrolls, right? Another way to get it is just to go over here to the website and look for the latest release. So we have Bureau of Statistics, economic news releases, and then you look for the employment situation right there. Okay, employment situation monthly. So it gives you a table of contents. We have employment situation summary, and it all goes all the way till the tables. Now, for those of you that are not very advanced, you might want to leave the tables because that is for, you know, our weekend analysis. So what I want to do now is just go to the employment situation summary and visualize, try to understand really what's happening. When they say that we have non-farm employment change at negative 92,000, what are they trying to say? So you want to go through this. We see that a total non-farm payroll employment aged down by 92,000. That is where you get that number from. And in February, and the unemployment rate changed little at 4.4%. So the US Bureau of Labor Statistics reports that today. They've collected data the whole entire February, and this is what we're seeing. Now, changes to household survey data. We have data for January and February reflect updated population estimates. Okay, so a smart breakdown of this is you need to put on your analyst glasses here. We just saw the live numbers, but now we want to show you something that separates beginners from the pros. If you've noticed, I'm not trading at the moment. We have continuations there, and I'm just breaking down the numbers. So, how to actually read this official BLS report? This is the source document, first of all. This is what the algorithms and the institutions are passing right now, right? So let's walk through this past release from February as a case study, because it teaches us exactly what to look for today. So we have the headline. We have the headline and total non-farm payrolls employment, total non-farm reduced by 92,000, okay? We have that. Throughout January, unemployment rate changed. So that's the headline, right? We get the news picks, but we don't stop there. Once we enter this document, we start to dig. So ask yourself, the jobs gains were they in healthcare? Were they in social assistance? Were they in construction? But look, the federal government and financial activities are losing jobs. So why this matters? A trader who just sees, say, minus 92,000 might think that it's actually bad. But a trader who really reads the details, sees the weaknesses in high-paying financial sectors, for example, and the government contraction, so that subtly changes the narrative from just the jobs added to where the jobs actually are and what is the quality. So when I open this chart, I'm looking for the quality. Are you with me, guys? All right, we have a few people watching. Okay, we have a few people watching. Good. All right, so we have, we'll look at that. And now we have this table, the effect of the updated population controls on December 2025. Good. Right, so what you want to do now is go to the households. You could check out the households, look at the categories, look at the employment status, unemployment rates for adults, men. So as you start to become more informed about some of these parameters, you will be able to identify very quickly which areas, which actually instruments are good for taking some of these trades. So the fine print that moves markets changes to establishment survey data, right? And when we look at gold, for example, gold right now, it tells us that the previous month's data was revised. November was revised down by 15,000, for example, after having gone through all that data. December down by 2,000. You know, that's about 17,000 fewer jobs than we thought. So the lesson, never trade just 1 month, okay? That is a lesson here. You don't have to trade just 1 month. You need to look at the entire scope, at least a quarter before, right? And then compare. If previous months are being revised lower, it suggests that the economy was cooling faster than initially reported, right? So you could see this here. If you open non-farm employment change, January 9th was 50,000. The forecast was 66. Then we increased to 130, and now we've reduced to minus 92. So with the non-farm payrolls, you want to say that it's a weak one. And because it's weak, we see this spike. So this has been justified. However, we also want to have the technicals in mind. We want to keep that. We understand that we're dancing around the high. Gold has never reached right here. This is the first time in history we've probably reached 5,600. So definitely we know that gold will keep pushing. Now, seasonality tendencies is a very important one. You want to keep your eyes very clear with the energy metal sector, right? You want to look at gold, see how it's been behaving, what are the characteristics. So you could go to Let's see, there's a lot here to look for, right? What you want to do is go to the seasonal tendencies. Okay. Seasonal tendencies. Okay, there you go. Yeah, some of these things are free, guys, but if you want to have more insight, like I use more research, that is a really incredible tool to break it down. This is when you're more advanced, you'll be able to tap into that. So let's go back. Seasonality, we are midway. This is Q1, so we're headed to the end of Q1, so we probably will get some good volatility depending on what happens. So if you're a swinger, you want to position yourself here. Household survey data. Okay, adjustments to population estimates for household survey data. So beyond unemployment rate, the unemployment rate again, 4.4, right? 4.4, the forecast was 4.3. So unemployment, it means it has increased by 0.1%. Okay, so but when you start to look deeper at this report here, it tells us that the long-term unemployment, jobless for 27 weeks or more, is up by, say, 300,000+ from last year. And now it makes up about 25% of all unemployment people. So in my mind, when I see this data, what comes to my mind is the jobs market isn't just about the rate, this rate that you see here. Okay? This rate that you see here, right? It's about the duration of the rate. You have to also consider that when you're breaking this down and trying to make a long-term decision, right? How long did it take? It's about the duration of unemployment. And as you can see, we've been dancing around here. If you open this, we had 4.4, 4.6, it went back to 4.4, 4.3, and now we're back to 4.4, right? Of course, if you factor in the New Year holidays and all that, that kind of makes sense. But the jobs market, you have to understand that a rising long-term unemployment number, right, signals a structural problem. So it's not just a temporary blip, as you might want to say. This is a dovish detail hidden inside a potentially neutral headline. Okay, so we have a negative, we have a plus, two negatives, and a plus. So the inflation, here it is, right? Average hourly earnings is 0.4%, right? So to $37 over the past 12 months, if you look at that, average earnings, where is that? Average earnings. Average earnings. Okay, we had a summary here. We used to have a summary here. Let's look for average earnings. Okay, go back there. Employment. Yeah, this is just employment. Okay. We have earnings. Do we have anything? February. Yeah, this was February. Friday, February. Publications. Okay, economics, major economic indicators. All right, schedules for news releases. Okay, there we have it. Household and okay, civilian populations, indicators. Yeah, we just stick to that, and we move down. We look for the annual population adjustments. Employment, population ratio. Yeah, there's a bunch of things here, right? But what you want to do is focus on the earnings. So over the past 12 months, if average hourly earnings have increased by, say, you open that and look for it, right? You could check out this table. Look at this, from 0.3, we've been dancing around, and now we're back to 0.4, right? With factoring last months 0.3%. So annually, this is still above the Fed's comfort zone. The comfort zone for inflation is 2%. Okay? Is a 2% inflation. So the move here would be, we don't just look at the dollar amount, say 37 being the new nominal high. That means that the consumer has more dollars, the consumer, any consumer out there, in their pocket, which supports spending and keeps inflation pressure alive. So this could be a hawkish detail. So this is how I break it down. And there are many others like sector analysis, survey data, okay, adjustments to population estimates for household survey, okay, we have that. Civilian labor force, what happened in January, what happened, the population control effect, and so forth. So sector analysis, the rotation story, you look at industry breakdowns like healthcare added 82%, if I'm not mistaken. Construction added about 33, and financial activities lost 22. So this pretty much tells us we're seeing a rotation. We have growth in defense, right? We have non-cyclical sectors like healthcare and rate-sensitive but necessary factors like construction. So shrinking in financial suggests a slowdown in deal-making and transactions. So if you trade indices, for those of you that are trading indices, right? This is where this detail is very important. Like the NASDAQ, which is very heavy on financial tech, might have a different fate that the Dow, for example, is very heavy on industrials and healthcare. So when data stops, or rather, sorry, when data drops, right, don't just look at the big number. Ask yourself, what are the revisions telling me? So you need to open this. If you're an experienced person, you open this table and quickly scroll through the history, look at the core retails, check out what's happening, okay? And get a feel, not just an intuitive feel, but you get a taste for the numbers. So ask yourself questions like, what's the quality of jobs, right? Is it part-time, or is it full-time, or is it sector strength? And you can see all that here. Okay, employment population ratio, we have unemployment rate, and not in labor force. If you look at the civilian non-institutional population, we have civilian labor force, participation rates, etc. Right? And you could go check out each of these tables. You start breaking it down, and you want to focus on sectors that affect services, daily services, right? Health is a very big one as well. You know, reasons for unemployment, for example, job losers and people who completed temporary jobs. What are the numbers, right? The duration of unemployment, we have from 5 to 14 weeks. We have 2,000, all right? We have 2,000. This is February, December. And you could see it's been growing a little bit. If you had from 15 to 26 weeks, you see the drop right there. 27 weeks and over, and so forth. So all these are pretty much indicators that give you a visual perspective on how the dollar is actually doing. And then you can predict what kind of inflation rates would be coming later on. So I think that's a good explanation for you guys. We'll be breaking this down. Some other questions that you can ask are, what's the wage story in dollar terms, right? So this is how you trade like an institution. You read beyond the headline. And once you have that, you can start analyzing immediately some of these instruments. So we see gold. Gold has broken. We've seen the spike. We had let's see. We had about, okay, that we had close to 1% growth at 48. a 48 pump. Okay. Now the reason I'm explaining this is if you want to predict, if you are into predictive analysis, if you know the story, you know how the non-farm payrolls actually have been coming up, you've seen the developments, say from previous 6 months, you can get a feel. If you look historically, you'll be able to predict, and with a good prediction, you can get in really well. So guys, we're looking at gold now. By the way, towards the end, we have 10 minutes. I'll show you how to withdraw some money on pocket options. Very quick, very easy, and it is a good way to finish the weekend. So with gold, we had a massive spike here. Okay, a massive spike, broke the 1 hour level that I had here placed. Okay, we saw that coming. Now, depending on your strategies, you want to go check out some of my strategies. Very simple ones. You can use a simple moving average. For those of you that love pullbacks on such days, you can use a Phoebe. That is a good way, right? You can use a Phoebe from the low. However, when you're trading fundamentals and you're using lower time frames, you want to use that last candle before the break. Once you had the break, you can use a candle and target the 70.5%, which is around here. So you might want to put your mark right there. Okay. Check out the higher time frames for that pullback, because we've already assessed, but you need some more confirmation. So you can also go check out the heat maps, look at the seasonalities, and just patiently wait. Right now, when it comes to risk management, I have a martingale free copy for you guys. You can set your deposit. It calculates for you automatically the stake, the accumulated loss, the payout, the net profit. This is a good way to be risk averse. And using pocket options, there's a very nice feature that I like. Risk calculator, I usually use an advised 1%, and you can break that down still and use that to trade. Now, if you look at the community channel that I have, I send the high quality signal and the instructions, okay? So those of you that are not there, go check out the description and join. When you get the signal, quickly get to this dashboard, set your risk amount, and then the timer. So depending on the strategy that I'm using, for example, for these fundamentals, I don't urge any of you to use more than 15 seconds, right, per move. 15 seconds should be enough. Now, let's go to gold quickly. Okay, set your charts very well. Let's see what's happening. What is the time? We have 7 minutes. Okay, 7 minutes to the to some more fireworks. Okay. Right, so this massive spike shouldn't scare you guys. Look at the euro US dollar. What is happening? We had a very good pullback, and usually just by experience, like I've been through this so many times, this will probably go down. Now you're going to ask yourself a question. The US dollar is weaker. However, if you look at comparative analysis, right, case to case, look at the euro, go check out what's happening with other pairs with the euro. So that is what I mean by comparative analysis. A good place to go check out is this open source. You could go look at the bar chart as well. You have the performance leaders. Okay, that's an extra confirmation that I like to use. And you could scroll out and look for the euro. Where is that? Where is it? Should be somewhere here, right? Yeah, euro US dollar is weak. Now ask yourself a question, why? Look at what has transpired throughout the week, because all euro pairs are weak. So you will still get it down. Now this is where the trick comes. Many people that are coming to euro US dollar are placing buys. Why? Because they think the dollar is weak. Why? Because they've checked gold and gold is spiking. However, you don't want to be in such a trap, right? You want to keep asking yourself questions. Where are you with the weekly time frame, for example? If you could see, we've broken out. We had this grab right here, and then we've broken down this support, and we probably might be coming down. You want to ask yourself very sensitive questions like, where are you in exhaustion areas, times, and so forth. So while we wait for the first candle, right, we've already had a nice pump with gold. Now I'm going to focus on gold just for today's show. So we have an entry there, clear entry. You can get in there, put your stops right here. Okay, so non-farm employment, remember guys, we had the headline number, the change in the number of employment people during the month, excluding farm workers, private household employees, and non-profit organization employees. So why farms? Why do they call it farms? Non-farm payrolls. Because agricultural employment is seasonal and volatile, okay? It obscures the underlying trend of the broader economy, right? See, people are not doing farming during winter, okay? If you include farms, you'd see huge spikes, very heavy spikes during harvest seasons. You'd see coffee, you'd see cotton, and all that. So that has nothing to do with the economic health. So that's why we don't have that. Okay? So forget about official forecast for a second. Now we're looking into technicals. The market has whisper numbers like unspoken consensus. This month, we've seen that. And by the way, guys, try to document and journal your... Is gold going up? Somebody's asking me. Is gold going up? Now, fundamentally, yes. Okay? Technically, as much as we've seen the spike, which has actually confirmed the numbers just by the scalper time frame, you want to be very careful with that question, right? Is gold going up? Right now, as I speak, we see it's back to the consolidation, and it would probably wipe out these laws here, okay? Because we failed to break the high. So we are probably coming down, but you want to have a nice entry point, okay? And wait for the trap as well. So as much as we're hungry for making money, guys, let us try to sit on our hands, okay? So I'm just watching these pairs. I'm going to move to my trading desk and look for some pairs that actually make sense now, right? If you see a rejection like now, I don't expect you to go in. We had an opportunity here that failed, and now we're back down here, and we'll probably get lower. Okay. Now, why are we seeing this? This is actually another, it's not a secret. I mean, if you've been trading for a while, you understand. The unemployment rate can fall, just like we've seen this. It can fall, right? Even when jobs are being created. Think about that for a moment. Unemployment rate can fall even when jobs are being created. How? Ask yourself how. Well, when people get discouraged and stop looking for work, they leave the labor force entirely. And they no longer just are counted as employment. So somebody who started, say, in January and left mid-January will not be counted as unemployed, right? So there's that fact as well. We have the participation rate factor. If unemployment drops and participation rises, then genuine strength, more people employed, more people looking, and so forth. While on the flip side, if unemployment drops but participation falls, that is false strength. People gave up looking. So another factor is participation factor. So what we saw today is unemployment rate prints, it printed out 4.4%. Now we need to check the participation rate. Okay, participation rate. Okay. Participation rate is very important. So we see that both the labor force participation rate at 62% and the unemployment ratio at 59.3%. It changed a little bit in February. So these measures showed little change over the year after counting the annual. So that will tell us if this is the real strength or the statistical illusions. Guys, we talk about a lot. We break down institutional capital flow. So go check out my YouTube channel, guys. I need to rush and send you guys some good signals. Do we have any more questions here? Yeah, we're getting some volatility now. Getting some volatility now. Don't know why this chart is not. Okay, we're using 30-second, 15-second. Okay. And again, the BLS inflation calculator lets you see the real world impact, right, of wages. And we'll look at that. For example, if wages go up 0.4%, but inflation is running at 0.3%, you're gaining around. So there's a lot to discuss, guys. For now, I just want to thank you all for joining me. Please ask questions. If you're just a beginner, I have a beginner course guide for you guys. Just go in there, start, get used to the numbers. I'm just sharing how people behind these big institutions look at these numbers. It sounds hard and complex, but as you start, it will start to make sense. All right, guys, once again, use this promo code as I wind up to get 100%. You could go check me out on my socials. All right, I'm growing that as well. Go check that out. It was really nice to share with you this knowledge. It's not sacred, but it's close to good. If this hasn't added some value to your trading journey, guys, smash the like button, subscribe, and turn on notifications bells. Share this with your friend, somebody who is into financial markets, and actually see how real traders, real professionals look at the market, guys. We're not just gambling with candles and things like that. The market will be open today, next week. New opportunities will always be there. So don't be greedy. Stay sharp, stay disciplined, and always trade like a pro. See you guys in the session. It's your boy, Tony.